Hello, everybody. This is Alan Elman, the Blue Collar Investor, welcoming you to this BCI video titled, In 54 Days, My Stock Was Up 71 cents a share, but I made $7.66 a share with options. And we're going to be using a series of trades shared with me by John, a BCI premium member, using a real life example with Vertiv Holdings, which is listed on the New York Stock Exchange under the ticker symbol VRT. Let's get started. In this video, what I'd like to accomplish is discussing how to achieve the highest levels of returns using covered call writing, a low risk option selling strategy. In particular, the three required skill sets in order to achieve the best returns. And that includes what stock or ETF, exchange traded fund, are we going to use as the underlying security? What option are we going to use? In the money, at the money, out of the money, a weekly, a monthly, later dated? And then finally, after we enter our trade, how do we manage our trades? So that's all incorporated into crafting our trade and then managing our trade. Important as far as exit strategies go is setting up our 20%, 10% guidelines as when to buy back the short call. And that's a big part of John's success in the series of trades that you're about to see. We'll analyze John's VRT trades over a 54-day span from 11/11/24 to January 4th, 2025, and we'll break up those trades into two different PowerPoint slides. After you see the slides and all the trades that John executed, we'll then calculate all of the option credits and debits, and then the share debit, because the shares, as you'll see, were actually sold for a lower price than they were purchased. We'll do the final impressive calculations and then summarize. So let's get started. Covered call writing and strategy goals. What we're doing with covered call writing is we're leveraging only the elite performing stocks and exchange traded funds, which by selling options, in essence, what we're doing is we're lowering our cost basis. And that will put us in a position, a really good position, to beat the market on a consistent basis, in many years, substantially. We start out by screening for the best performing stocks and ETFs at the time of the trade. Now, that will change week to week, month to month. But at the time of the trade, we'll only use elite performers. In this case, it was VRT. And then we'll sell options. But before we sell the option, we have to decide, well, what are we looking to achieve in terms of our initial time value return goal range? How much money are we looking to make as our starting point? Okay, so for me, it's 2 to 4% on a monthly contract, and then just divide that by 4 for a weekly contract. And then once we enter our trade, we manage them if exit strategy opportunities come by. Sometimes they will, and sometimes they won't. But almost always we start with those 20%, 10% guidelines, which we'll discuss in the next slide. So here we go. On 11/11/24, VRT was purchased at $125.40. As you'll see, 54 days later, VRT closed at 126.11 for a gain over those 54 days of 71 cents a share. So if we bought VRT on 1/11/24 and sold it on 1/3/25, we would have generated 71 cents a share. But the way John did things, writing covered calls and using his exit strategy skill set, when the smoke cleared, he ended up generating a return of $7.66 a share. Let's start by talking about those 20%, 10% guidelines, which we'll see used quite a bit over this 54-day period. Now, these are threshold guidelines as where to set our limit order instructions to our broker when to buy back the short call if the price of the stock declines substantially. So if the price of the stock goes down, the value of that option that we sold will also go down. Now we keep the original option premium. That I want to make clear. That never goes away. That's in our cash account and ours to keep no matter what. But we could buy it back at a much lower price if share price declines, putting ourselves in a position to mitigate losses, turn losses into gains, and even in some cases to enhance gains to an even higher level. Now they're based on the entire original premium. Now, whether it's 20% or 10% will depend on where we are in a monthly contract. So if we're in the first half of a monthly contract, we set it up for 20% of the total premium. In other words, we instruct our broker, yeah, buy back this option. If we sold it for $2, 20% would be 40 cents. At 40 cents, if the price of the option goes down to 40 cents or less. And then if that threshold is reached, the trade will occur automatically. We don't have to be in front of our computer. Now, in the last 2 weeks of a monthly contract, we will change that 40 cents to 10% of the original $2 or 20 cents. So buy to close, good till canceled at 20 cents. Okay. Now, if we're doing just weeklies, then it would start out with 10% of the total premium. So there we go. If we sold the $2 option, it would start out at 40 cents at the beginning of a monthly contract. And then the weekend before the last 2 weeks of that monthly contract, we would go in and change it to 10% or 20 cents. All right. And how we describe the limit order to our broker, it's buy to close because we sold to open the original covered call option, buy to close, and then GTC or good until canceled. So it'll stay there until we change it or until the option is closed or expires. All right. So that's something that you'll see done quite a bit in these series of trades. Now, why did John select VRT? Well, in our premium member stock report, which is published to our premium members on the weekend, it was one of the best performers, an elite performer, based on all of in the blue row that you see on the top, it's fundamental, technical, and common sense screens, and a lot more information like, is there a dividend? How many weeks has it been on our list? Is there an ex-dividend date? What is it? And so on. So it goes through a series of rigorous screens. If it makes our list, it is an elite performer. And you can see VRT highlighted. This is only a little snippet of the 9-page report we provide to our members. There's also reports we provide midweek for exchange traded funds. And then we do a monthly Dow 30 or blue chip report of the best performing elite performers for option trading. In this particular case, VRT passed our screen. You could see it in bold here, meaning that it was an elite performer from a technical perspective also, which is trend and momentum. It was a hot stock at that point in time, and that's why John selected it. Now, the series of trades that you're going to see over the 54-day period started out over here on 11/11. You could see that VRT had gone up. It was trading consolidating for a while, then boom, it went way up. And then you could see it was very volatile over that 54-day trade. And that's why John was able to institute and execute so many exit strategies. So I'm going to be showing you this screenshot adjacent to all the trades, but you could see it clearer here. Some of you may decide to freeze this particular screen, take a screenshot and print it out so you could follow it as we go through the next 2 PowerPoint slides. But in any case, this shows you the volatility of VRT and the fact that we were able to execute so many different exit strategies. So here's the first series of trades I want to show you, starting on 11/11 when the trades were started and going through 11/18, 2024. Once again, on the left is the screenshot of all the trades. So we started out on 11/11. You could see that 200 shares were purchased at 125.40. I mentioned that before. And then one contract was sold because we could sell 2 contracts because we own 200 shares. John sold one 11/15, a weekly contract for the 124 strikes, so it's in the money, and generating $3.35 a share. He set a buy to close limit order at 67 cents. Now that was actually 20%. He could have set it at 10%, I'm nitpicking now, but in any case, he did set it at 20%. Now, also, he sold one contract of the 127 out of the money strike, higher than the 125.40 at $1.89. And then he set a buy to close limit order at 13 cents, which was approximately 10%. If we were nitpicking, we'd go to 19 cents, 10% of $1.89. But 13 cents is not unreasonable. So what happened? 3 days later, VRT dropped from 125.40 down to 121.46. And John was able to close the two call strikes buy to close limit orders at 67 cents and 13 cents. So those thresholds were reached. Now, I wrote down roll down with a question mark. Did he have an opportunity to roll down and generate more income? I don't know. So that's something that I'm sure John checked and maybe he decided not to. But that's something that would come to mind at that point in time because we still had 2 days left before contract expiration. There may have been an opportunity to roll down, probably not because John didn't. In any case, VRT the following week, this is after the contract expired, on 11/18, what happens? It popped back up to 124.64, and he sold one contract of the December 12/23/24. So that's a monthly contract of the in the money 123 strike at 8.45, and then set a buy to close limit order at 20 cents. Perfect. And then he sold another contract also of the 12/23/24, 124 strike, slightly in the money, almost near the money, and generated $8. So the volatility of VRT allowed for really juicy premiums. Now, the buy to close limit order on the 124 strike was set at $1.60. Also perfect, nice work, John. Now, got all that? So let's move on. If not, you could reset the video and just replay this section. But let's move on now to the next series of trades starting on 12/5. Well, that's before the last 2 weeks of this monthly contract. So those buy to close good till cancel 20% limit orders were changed to 10%, which is 85 cents and 80 cents respectively. Now, on 12/18, VRT was trading at $119. Both of the calls were closed at the 85 cents and 80 cents thresholds. Were there opportunities to roll down then? I don't know. I'm assuming not because John didn't, but that's something that a light bulb should go off. Do I have an opportunity to generate more premium by rolling down to an out of the money strike? That would be a strike higher than 119, maybe the 120, 121 strike. That's something we should always look at. But anyway, what happened? Both contracts on the 20th expired worthless. And then on the 23rd, the following week, VRT was trading at 120.50. It went up a little bit. John sold now two contracts of the January 3rd. Okay, so it's about 10 days, 12 days. 120 calls, about at the money, slightly in the money, and generated 295. The buy to close good till cancel limit order was set at 29 cents, 10%. Perfect, John. Now, on about a week later, VRT was trading at 114. It went down over here. Went down. So the two contracts were closed at 29 cents for a total of 58 cents or $58 for the two contracts. And on January 3rd, VRT, look over here, folks, on the left, it popped up and closed at 126.11. John did not buy back the option and allowed the shares to be called or sold as the option was called at 120. So it was trading at 126, but he was obligated to sell it at 120. Wow, that's a lot of trading. But John has been a premium member for a while, and he's pretty savvy when it comes to these exit strategies. And that's why he ended up with a really nice result. So let's first now take a look at all of the option credits and debits, and then the share debit, because the shares were sold at a lower price than they were actually purchased. So if you add up all the option credits, you get $2,915. If you deduct now the option debits when we bought back the options, it came to $303. Now, what about the share loss? For the 200 shares, John paid $25,080 and received, because he had to sell it at 120, he was contractually obligated to do that. So he received 24,000. That left a debit on the stock side of 1,080. So if you add up the debits and subtract it from the credit, we end up with a net 54-day credit of $1,532. So now let's see where we stand with our final calculations. On a cost basis of what John paid for the 200 shares, $25,080, that represents a 6.1% return. And based on 54 days, that annualizes out to 41.29%. Not bad. Also, the 1532 represents a profit of $7.66 a share. Remember, the share price rose in the 54 days by 71 cents a share. Quite a difference using the options. So all I have to say is pristine work by John. Let's summarize now. Selling call and put options conservatively, and that's the way I do it, the way John does it, and most of the BCI members using low-risk option strategies, puts us in a position to potentially outperform the market on a consistent basis, and in many years, substantially. We have to master stock and option selection as well as position management. You saw a lot of that going on here, rolling down, rolling out, and hitting a double, reselling the option. You saw all that in the 54 days of trading. That will allow us to achieve the highest possible levels of returns. And these trades shared by John, these VRT trades, were really outstanding examples of these possibilities. And that's why, because of the educational value, that's why I decided to create this video and share it with the entire BCI community. Now, if you'd like to master the strategies of covered call writing and selling cash secured puts, go to our website, thebluecollarinvestor.com. I just want to show you quickly a couple things we have here. You could click on the membership link here and have access to the 4 reports we provide to our premium members, along with over 250 training videos and much more. There's a video there that will describe all the benefits. Go to our store. We have 2 links there: best discounted packages and individual packages by building your own toolkit. There's video descriptions of that. I would suggest the BCI package and add the TMC package to it as your best deal. If you want to get everything, then go to the CEO Total package, and you'll have everything BCI has to offer, except if you want to become a member of our one-on-one mentoring program. We also have a huge free training resources, videos, and other resources. Just click on this link over here, and everything there is free. Also free is our blog. I've written over 700 articles over the last 18 years. Those are also free. And you also, if you go to the blog link on the right side, scroll down, you could fill in the short form and receive a free newsletter every week, 10 a.m. Eastern time, every Sunday. And I spend hours a week writing these articles, and they all have educational value. You can also go to our events link and see when we're doing webinars, live seminars, discounts, and so on and so forth. And of course, log in if you're a premium member or if you purchased any of our online tools like our videos and so on and so forth. Here's where you would log in. So yeah, at our website, thebluecollarinvestor.com, and you can take advantage of all of these resources. So that ends this BCI video. In 54 days, my stock was up 71 cents a share, but I made $7.66 a share with options. John, thank you very, very much for sharing these trades, and congratulations on a job well done. And of course, thank you to everybody out there for taking the time to watch this video. Folks, I hope you enjoyed it, but most importantly, I hope it puts cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.